Every major technology begins with a promise that seems almost impossible. But between a scientific breakthrough and a profitable industry, there is often a long and expensive distance. Quantum computing may transform the future, or reveal how far investment expectations have moved ahead of reality. A market this small should not be attracting this much money. IBM has committed $10 billion to a quantum market that barely exists today. Google says its Willow chip outran a classical supercomputer by 13,000 times. Yet the entire quantum computing industry is worth only about $1.6 billion. That enormous gap between investment and actual business is the real story. Quantum computing is not a hoax, but Wall Street may be pricing the science years ahead of reality. Market forecasts range from $8 billion to $50 billion by the mid-2030s. Those numbers sound impressive until you compare them with the industry today. Multiple research firms place the current market near $1.6 billion. Insight Ace Analytic estimates roughly $2 billion, but the overall range remains narrow. That makes quantum computing smaller than the annual revenue of one mid-sized technology company. More importantly, much of this money is not traditional product revenue. It comes from government contracts, experimental cloud access, and corporate research budgets. McKinsey reports that more than 300 companies are adopting quantum computing. But adoption often means testing experiments, not replacing real production systems. QEDC estimated a $1.9 billion market in 2025 and expects more than $4 billion by 2028. Doubling in 3 years sounds powerful, but the starting point is still extremely small. Hardware and quantum systems currently represent about 63% of the market. Finance and banking lead the end-user side with roughly 22%. Today's buyers are mainly researchers and financial firms testing narrow optimization problems. North America controls about 30% of the market, followed by Europe and a growing Asia-Pacific region. Forecasts approaching $50 billion by 2035 assume that almost everything goes right. Error correction must arrive, applications must work, and experiments must become paid contracts. The market is tiny, but the organizations with the best information are betting that it will not stay tiny. The events of the last year make it difficult to dismiss quantum computing as empty hype. In October 2025, Google introduced its Willow quantum processor. Willow is a 105-qubit chip built to demonstrate measurable quantum advantage. On a specialized benchmark, it completed a calculation 13,000 times faster than a classical supercomputer. The result was published in Nature and independently verified. That verification mattered because earlier quantum supremacy claims were often disputed. On this specific test, Willow passed. Then, in June 2026, IBM announced the largest corporate quantum commitment so far. The company plans to invest more than $10 billion over 5 years. Its goal is to build the world's first fault-tolerant quantum computer by 2029. The roadmap includes the Quantum Nighthawk processor and Quantum Starling supercomputer. This is far larger than a normal research grant and shows how seriously IBM views the opportunity. The White House entered the race during the same month. President Trump signed 2 executive orders focused on quantum capabilities and cryptographic defense. Reports said IBM and Google parent Alphabet would help with implementation. Separate reports suggested that a $2 billion federal quantum package was also being prepared. When governments and major technology companies align this closely, the technology deserves attention. IDC named D-Wave a MarketScape leader for 2026. D-Wave also completed a $550 million funding round. Quantinuum reportedly holds a $2.3 billion cash runway, with systems planned for 2027 and 2029. Combined with hundreds of corporate experiments, the ecosystem is clearly accelerating. But the press releases often hide the most important limitation. Willow's advantage came from random circuit sampling, a problem designed for quantum processors. It does not mean the chip can already design a drug or optimize an investment portfolio. IBM's 2029 target is ambitious, but quantum roadmaps have slipped before. The breakthroughs are real, yet the distance from a laboratory result to a commercial product is still measured in years. That creates a difficult problem for early technology investors. The science is visible, but the revenue is still largely invisible. Pure-play quantum stocks have moved through dramatic rallies and sharp corrections. IonQ, D-Wave, and Rigetti often rise on policy news rather than revenue growth. These companies are building genuine hardware while selling a future not yet visible in their earnings. Quantum stocks surged through late 2025 and early 2026 before falling back. Today, much of their movement still depends on narrative momentum instead of fundamentals. Sector analysis suggests startup funding may decline from the 2025 peak. That peak reached about $3.9 billion across 127 deals. The capital remains significant, but the acceleration may be slowing. The larger concern is the cash test approaching in 2028. Pure-play companies have limited commercial revenue compared with their valuations and spending. Rigetti has faced qubit scaling delays and weak commercial traction. It reportedly holds about $570 million in cash, but cash alone does not create momentum. Investors must decide whether the current weakness is a temporary dip or a longer waiting period. Defensive spending provides one source of demand that may arrive earlier. Google research suggests fewer than 500,000 qubits could theoretically threaten Bitcoin encryption. Coinbase CEO Brian Armstrong has described the quantum encryption threat as urgent. That risk creates government and institutional demand for quantum-safe infrastructure. But defensive spending is not the same as commercial growth. A technology can be strategically essential while remaining financially disappointing. For investors, the national security story and the revenue story must be evaluated separately. Quantum computing is not another metaverse or Web3 story because the physics and progress are measurable. Still, it is moving through a classic hype cycle where expectations are ahead of delivery. NVIDIA investors once waded through years of sideways trading before the artificial intelligence boom. The difference is that NVIDIA already had growing revenue during that waiting period. Quantum companies are still proving that customers will pay for their products at scale. The hardware itself offers a more honest picture than the stock charts. Current systems range from about 100 to more than 1,000 qubits. D-Wave's Advantage 2 Fader 2D2 platform has exceeded 1/200 qubits. But raw qubit count is no longer the most important measure. Error rates and coherence times determine whether useful calculations can be completed. Those limits still restrict practical applications to narrow types of problems. IBM's fault-tolerant 2029 T40 target remains the industry's clearest milestone, but delays are possible. In June 2026, Amazon said commercially useful quantum systems were moving closer without giving firm dates. Quantum computers will not replace classical computers for most everyday tasks. Their potential lies in specific problems that classical systems struggle to solve. Drug simulation, portfolio optimization, supply chains, and cryptography are leading candidates. Each application may still require expensive custom integration for a narrow advantage. Hybrid quantum classical systems are therefore the most realistic near-term model. Quantum processors handle suitable calculations, while classical machines perform everything else. That could create value sooner, but it may also limit the total market. Quantum is a specialized accelerator, not the next cloud platform or artificial intelligence. Its specialization creates both its greatest strength and its commercial ceiling. A multi-billion-dollar niche by 2030 to 2035 is more realistic than an immediate trillion-dollar industry. Quantum computing is real technology with unrealistic timelines. So follow the data, subscribe, and do not bet on the noise.